Here is a secret that the professionals are not sharing with you. Professional traders and investors, they don't try to predict prices. Instead, they're looking for market asymmetries. They're looking for mispricing in order to long-term outperform. And you can take advantage of this as well. Most assets within an asset class compete against each other. For example, we've got Ethereum relative to Bitcoin. It tends to trade in a range. At times, Ethereum is cheap. Other times, it's expensive. The dotted line, that's the average ratio of the two. And so as long as you believe that both Bitcoin and Ethereum will stay relevant over the very long term, you can just play that delta from the equilibrium. Now, for Ethereum and Bitcoin, those two assets, they tend to be not very closely correlated. And so betting against the current momentum is dangerous, especially right now, since we are not extremely cheap. The potential downside from here is still another 40% underperformance of ETH relative to Bitcoin, even when we are below that equilibrium. But this idea of competing investment assets, it also applies for other asset classes. Gold relative to silver, for example. This is a very long-term chart. It starts in 1932. Sometimes gold is comparatively expensive. Sometimes it's comparatively cheap. Again, the dotted line is the equilibrium. Currently, we are very close to that equilibrium. So it's not necessarily a surprise that gold underperformed silver over the last year and that silver had such a run. It was simply so expensive, relatively speaking. Predicting the actual price of an asset is very hard because there's all of those different influences, right? We've got the credit expansion and contraction. We've got movements across asset classes, right? Sometimes gold is very much hyped up. Sometimes it's the stock market. Sometimes it's crypto. So getting those shifts right and combining all of those factors into a proper price prediction is very hard. But when we look at relative performance within an asset class, we are isolating a lot of the other influences. If credit expands or contracts doesn't really matter for the ratio of Bitcoin to Ethereum or for the ratio of gold to silver. And I believe it's easier to make money with relative valuations than trying to bet on the price directly. Have a look at this here. This is the same product. We've got Brent in green and WTI in blue. So that's two types of oil, right? We've got European oil and US oil. And here, because we don't just have the same asset class, but actually the same kind of product almost, we have a very tight correlation. Now the two prices tend to move in the same direction very closely. That's what we mean with correlation, right? They go up and down at the same time. But again, we can trade the ratio. This is now Brent divided by WTI. On average, European oil is 5% more expensive than US oil. But there are times when it's 11% more expensive, or there are other times where it's just 1% more expensive. And again, this is a longer term chart that starts in 2021. And while it seems like all the gains are made by betting on prices, because here we've got, say, an 80% rally, potentially even 90% rally, we can also collect nice paychecks by betting on the imbalances. So for example, if you go short Brent and long WTI, we've got a 3% gain over here, another 3% gain over here, then we get another extreme, that's 5%, and here's another extreme, again 4%. We are already at roughly 15%, then at this, that's another 4, another 1. We are roughly at 20% return over the course of the last 2 months, when of course volatility was higher because of the Iran war. Still, 20% in a very short time period without that much risk, just by trading the differences. We are not making positional bets on where we think the price is headed. We are just trading imbalances in the market. And this is what most professional traders don't want you to know. Because once retail tends to trade those kinds of imbalances, of course the gains for the professional traders tends to shrink, right? Because once we trade against the imbalance shrinks. The highest edge in the market is the one that's not broadly known. Now, the tighter two assets are correlated with each other, the more they move in tandem with one another, the safer the gains are, but also the smaller they tend to be. If we have more loosely correlated assets, we tend to make more gains, but we also have more volatility. For example, we can look at agricultural commodities. We've got cacao and we've got coffee. Both of those have similar kinds of inputs, right? To produce them, we need land, we need energy, we need labor. Now, because of that, we should expect that the ratio between the two should at some point be at an equilibrium. So at the top, we've got cacao. At the bottom, we've got coffee. And once energy got more expensive, they tended to appreciate in price. One of the main input variables pushed the price up. Now check this out. This is now cacao relative to coffee. It's a chart that starts in 2016. The dotted line is the equilibrium price. Currently, cacao is comparatively cheap to coffee, and until it hits the equilibrium, it could, relatively speaking, outperform by another 30%. So what we want to do here is we want to go long one asset, we want to go short the other asset, so that in the end, we are not exposed to the general ups and downs of the price, we are just exposed to the ratio of the two. And yes, I understand how it can be scary, say at the end of 2021, to buy cacao and short coffee when coffee had such a run. But if you do that contrarian bet, there is a gain to be made of more than 100%. And so that's the whole idea. We want to be contrarian in the way that we go against the current narrative of the market. And we just bet on the long-term equilibrium. Be this the equilibrium of Ethereum relative to Bitcoin, or the equilibrium of gold relative to silver, or be this for the different types of oil, or for different types of agricultural commodities. This concept works across many markets. What we want to look at is assets that compete for capital. So let's say Bitcoin versus Ethereum. We want to look for assets that are very similar in nature, let's say different types of oil. Or we want to look at assets that have fundamentally similar pricing rules, that have similar inputs, let's say for different agricultural commodities. I believe that's one of the major ways to consistently outperform the market that, interestingly enough, is not yet popular among retail. I rarely see videos on YouTube made about this concept, but it's also how I personally generate my outperformance. Have a look at this. This is natural gas at the top and the oil price at the bottom, and to a degree, not 100%, but very long term, those are substitutes. They're both sources of energy. And yes, you can't substitute this month by month, but if one becomes too expensive relative to the other, the proper machinery, the proper infrastructure will be built. And so let's have a look at the ratio again. Natural gas divided by WTI. Surprise, surprise. Again, another oscillating chart as all the others. This starts in 2017. And currently, natural gas is comparatively cheap relative to oil. And it could outperform by another 42%. Now, what we do here as traders is that we narrow the volatility of that ratio. We keep the ratio stable by going long the thing that's cheap and going short the thing that's expensive. And I think that's actually a net benefit for the economy. We, of course, make money doing this, but the economy also has a more stable environment. Businesses can plan better. They've got less fluctuation in their inputs. And it's the unexpected volatility that especially penalizes the small players that aren't capitalized as well. Now, this is a crypto channel, and I personally like to do those relative valuation trades with the altcoin market. Now, most altcoins tend to go down long term because the venture capitalists, the team, insiders, promoters, they all get token allocations over time. That increases the token supply. Thus, most altcoins tend to go down. Now, not just in US dollars, but especially versus Bitcoin, Ethereum, and Solana, the tokens that don't inflate as much. On average, the altcoin market has hundreds of millions of new token unlocks every single week. And if the demand isn't that high, then the altcoins have to go down. Let me show you an example. This here is Filecoin. That's a circulating supply of Filecoin over time. And this is the Filecoin price relative to Bitcoin. This goes down long term. This is not oscillating around an equilibrium. And why is that? Because Filecoin and Bitcoin are not the same type of asset. Filecoin is much more inflationary. It's very unlikely to generate the same performance as Bitcoin long term. It's a very different ratio compared to, say, the different oil prices or comparing different agricultural commodities. But that long-term declining ratio is also an opportunity. Again, we can bet on a falling Filecoin price and a rising Bitcoin price. And then we are flipping the chart. This is now Bitcoin divided by the Filecoin price. This is how I personally outperform the market. That's why my trade track record is that good. On average, I made 5.3% per trade over the last 173 trades. That's with an average holding duration of 27 days per trade. And this shows the chart that starts 2 years ago. And every single one of those trades is locked completely transparently. So for example, over here, I shorted the Trump token. We can have a look at the 2 notifications. So we just click on those dates over here. Then Telegram opens up and then we can have a look at how I'm entering the Trump relative to Bitcoin short. That was on the 20th of March for this example. And then let's have a look at when I closed it. That was over here on the 13th of April. And so that was a 16% profit maker. Again, on average, it was 5.3%. But still, who makes 5.3% on average over a sample size of almost 200 for trades that are held on average just 1 month? I try to be as transparent as possible on this channel, but really this is not magic. This is just trading the general structure of the market. The edge in active trading is not necessarily trying to predict prices, trying to figure out if the credit market will expand or contract, trying to figure out where the asset flows are going. It's rather to try to find market inefficiencies, and that's in mispricings. And mispricings are the easiest to find in relative valuations. How is one thing priced relative to the other thing? How can we isolate the thing that really matters and exclude all of those other impacts? If Trump tweets about a particular asset class, this doesn't necessarily have an impact on relative valuations. It only has an impact on prices. But we go long one thing, we go short the other thing. We make money with the delta. That's why the curve is appreciating relatively constantly. Now, the individual Telegram messages are of course part of premium, because you need the premium membership in order to access this trade channel. But the same kind of trades are published over here as well. This is in Trade Track Record. It's on the website that's linked down below. It shows the same chart over here, and it also shows the individual trades. Of course, not the currently open trades, right? That's all for the people that have joined. But you can verify every single trade yourself on the public website as well. You can have a look at what is realistic winning or losing trade and how consistent is the winning. And so feel free to simply just apply this yourself. Feel free to track relative valuations in TradingView and come up with your own trading ideas. If you want to do the same trades that I make, then of course, check out the link down below. It's currently $125 per month. There's also a 7-day money back guarantee. So in case you don't like premium, just email me over here and I'll refund you, no questions asked. If you got something out of this video, feel free to subscribe and send this to somebody that might be interested in applying those kinds of strategies. More details on how to actually execute those relative valuation trades are of course again in premium. A like on this channel would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.